Hi Jay, good evening.
Hi Ramya, good evening.
So Jay, I thought for the sake of our friends, we can look at the Active Trader Pro tool. I know initially when we started this journey, you had taught us how to use this tool and some very good features of this tool. So I thought we can do a quick video on how this can be useful.
Sure, Ramya. Yeah, since I use Fidelity, we are showing all our examples on Fidelity. I think each of the platform has very good features, and one of the feature that we liked about Fidelity was the simulation, where you
Right.
can actually simulate and see uh, how my particular option or how my trade
Will behave.
can work. We have actually shown in our videos, or number one, this options chain. So if you go into the option chain, give me a tick.
How about Tesla?
I love that. Okay, let's put Tesla. Then as you can see, the three options chain. And what you see here is Tesla as the ticker symbol. This is the current price, volume, and then all of these things, bullish, bearish, and all that is here. What is interesting here is you can actually choose either 5 strikes or 10 strikes or 20 strikes or all strikes, or you can even give a custom range for what strikes you want to see. When you click on all strikes, it will display all the options across all the strikes available for Tesla for that particular date. So let's say if you take 20 strikes, this is the, if you click on this, all the weekly options will go away. If you want to trade weekly options, you can keep it on. We typically choose monthly ones, so I usually have this off. And then these are the expiry dates.
Okay.
And what you see here is the bid and ask. This is where you either pay or you get the credit. This is the volume. This is the open interest. And as we discussed, open interest is the amount of interest that is available for that particular strike for that particular expiration date. And volume typically goes up and down on any given day. When you go very far out, you won't see much volume, but you will still find open interest.
So volume is on a daily basis, and open interest is the number of total contracts for that strike and for that particular date. That is what is open interest.
So these are the Greek values: delta, gamma, theta, vega are the Greek
Yeah,
values.
we need to do another video on those someday.
Absolutely. We will do an option Greeks. I mean, as the name suggests, they are really Greeks. And I know each of this actually qualifies for one video by itself. And you can find quickly the intrinsic value and time value. Basically, how much intrinsic value is already baked in and how much you're paying for the time value. And on this side, these are the strike prices. The reason why this is listed here is you can choose the calls on this side and puts on this side. These are the strike prices. Let us pick one and then we can show a simulation on the simulator.
I want to go about, say, March of next year. And I want to go a little low on Tesla. Tesla right now is close to 450. I would be happier owning it, 350 or under. So,
okay, let me do all strikes then. See, I've chosen the puts alone. I'm assuming that you wanted to do a...
Yeah, I want to do a short put to see, in case there's a big major pullback on Tesla, and if I can get in.
See, I read your mind and then I already opened. And as you can see, this is the puts. And then you said you're okay to own Tesla at 350. Tesla at 350, should I go for 360 strike or 350?
350. What is the delta? 350 is around 14, 15. Yeah, 350 is good.
350, which is 14 delta, which means you're doing a short put. So you have 85% chance that you'll basically book this entire profit. So and it trades between 1045 and 1055, meaning that if you write a short put on Tesla at 350 strike for March 2026, then you receive this credit. So now let's look. Okay, now you've seen this in the options chain, but how does this trade behave? This is an important thing, right? This is why we use this particular feature in the Fidelity Active Trader Pro, which is a desktop version. You get into the profit loss calculator.
Okay.
And do Tesla. So I'm trying to simulate this position here. So what we chose was...
So this is one thing I wanted to just point out. The ad simulated position is like a very small clickable box which is on the bottom right of the screen. So that I remember when I initially started off, I struggled to find that.
Let me show you. So as you can see, this is my cash account. I'm choosing the add simulated position here.
Yeah.
I'm doing a sell to open one, and then expiration we decided March, and then we decided to do a 350 350 strike, put and apply. If you do this, this actually shows us a strategy that you are entering. Right. And what you see is the contract that, I mean, this is choosing the bid price. Typically, we will choose the mid price between this, and that gets filled there. But that's okay. So, if you are entering this, you are receiving this much. Let's say Tesla stays. I mean, give me an example here. What you're seeing here, right? The profit loss at here is, this is showing 3 different rows. The first one is the date on which you have entered this contract. Right. The second one is the simulated one. Right now, this is where you got to do the simulation, the price and date here. Right now, since we have not entered anything, it's showing the same record.
Right.
And last line is the expiry date. Yeah. The expiration date on how would this behave on the expiry date. How you will read this is on the expiry date. If, let us say, Tesla remains at 445, right? Or whatever, from here to here, so the break, you will read it like this. This is the graph, and 339 is the break even. So anything about 339.55 for Tesla will be profitable for this trade on the date of expiry. So if Tesla stays at 340 on expiry, or Tesla stays at 360, you will book the entire $1,045. If Tesla stays at 380, you will book 1,045. So all of this is denoted here, right here. This is on the date of expiry, how Tesla behaves and at what price, and below which you will see a loss here. But ideally, what happens on a short put, if it goes way below this, it gets assigned. Yeah, you will take the assignment, which is like 350 minus 10, 340. I mean, you need to prepare your account to take the assignment and have $34,000 in cash for, actually 35,000, because you've received this 1,045. You have to have 35,000 in the account for you to take the assignment. So this is all this one. So right now, the key factor or the key feature which we show in our most of our videos is we simulate the price here. Give me a price for Tesla by. Do you believe in Santa Rally, Ramya?
Not Santa Rally. Say, as Elon Musk is saying, he just announced yesterday that in 3 weeks there will be unsupervised robotaxis in Austin, and say the stock spikes to 500 by end of the year.
Wow. I like that. Let's say on December 31st, it goes to 500.
Right.
So you don't need to write this once it goes to, see, this is the second row. On December 31st, if the stock Tesla, which is the underlying, goes to 500, you will have this contract will have 700, meaning you have received 1,045. This is losing value. This contract is losing value, which is nothing but you are making the profit. You are booking the profit. So you will book $731 profit on December 31st if Tesla goes to 500. You can just simply close the contract because sell put does not give you the right. You only have the obligation, right? So you can simply do a buy to close of this contract. And what you will eventually do is you will, return 270 plus 45, $315 back to your platform because you have already received
45 minus 731.
Minus 731. You will kind of give back to the platform, but you get to retain this profit, meaning that 731 is something which you get to retain. So that is how you will simulate. Let's say instead of going up, it goes down to 360, let us say.
Right.
What will happen is this contract will actually have a loss of 1,830.
Right.
Because it has gone against, sell put is a bullish strategy. Because it has gone against your belief, this is losing value. But you can simply roll it, you can book the loss, or you can just stay put and
wait for the
short put and then take the assignment if that happens. Yes. So the advantage here with this short put is this 360, and even if it trades sideways till, let us say, January 30 or even February 27, the loss is reduced, and then you can wait till it becomes positive and then close this. So even let's say on March 13th, it is still 360. You're still making money out of this.
Right.
That is the advantage of yeah. So this I mean, you can imagine this, but this simulator tool helps us to see where it stands, and depending on your level, resistance level, if you can quickly plug in and see, and you can change this date to anything. This is 3/13/26. You can put it, but it has to be lesser than your expiry date.
In the graph section, the three different colors are aligned to the three different lines in the table.
This blue is your expiry date, the final one. This orange is the one which I'm simulating. And this particular one is the entry date.
Yeah. And
I've entered today, and then by end of day today it has gone up. You can still close it. You can make a day trade and book some profits and come out. Let's say I entered at 446 and then it goes to 480 before the closure. I can just close this contract and book $380 profit.
Right. And the x-axis is the price of the stock, and the y-axis is the profit and loss. Right. All right. Great. Thank you so much, Jay.
Thank you, Ramya. Have a wonderful evening. Bye-bye.